All right, welcome back to our daily data dive into the DEX bond ecosystem. We're looking at day 9, and after that powerful rally we've seen, things are cooling off just a little bit. So let's jump into the numbers and figure out what's really going on.
But first, you know the drill. Quick but important reminder, this is all for educational and informational purposes. It is absolutely not financial advice. DeFi is the Wild West, so please always do your own research.
Okay, so after celebrating that full recovery back to the starting line yesterday, our main headline number today is a pullback. The ETH ratio is down 1.6%. It's actually the first red day we've had in a little while, so we definitely need to understand what's behind it.
And that brings us to the big question, right? How do we read this? Is this just a totally normal, predictable bit of consolidation after a massive 3-day run-up? Or could this be the first sign of a new downward trend? Well, let's let the data do the talking.
Okay, let's get right into it by putting today's numbers in their proper context. Because a single day almost never tells you the whole story.
So, looking at the main dashboard here, things did cool off a bit across the board. The ratio is sitting at 0.0246 ETH, and the total value of the fund saw a paper loss of about 3.2% for the day. That's pretty much a mix of ETH's price dipping a bit and the fund's assets dipping a little more.
But here's where it gets really interesting. This is all about perspective. Yeah, today's ratio is down from yesterday's peak for sure, but look where we are compared to the bottom we hit back on day 5. We are still significantly higher. So this wasn't some kind of crash, it was just a measured step back.
And get this is a super important point. Even with today's dip, the total fund value is still net positive since we started tracking this whole thing 9 days ago. I mean, after all that volatility, the fund is still up from where we began. That's pretty telling.
All right, now let's shift gears to what I honestly think is the most bullish, the most positive signal of the day, trading volume. This gives us a much clearer picture of what's happening under the hood.
I mean, look at this. The biggest story of the day, hands down, is the massive rebound in 24-hour trading volume. We kind of expected a Monday effect, and we got it. Activity just surged by almost 50% compared to Sunday, hitting a really robust $8.37 million.
And when you break it down, it gets even better. Zora held pretty steady, which is great, but check out the explosive growth in some of these other pairs. Volume for KTA, EDL, and LMTS all more than doubled. I mean, KTA saw a staggering 226% increase. That is the sign of a very, very active market.
And you've got to remember why this matters so much. This surge in volume is a fundamentally healthy sign. Trading fees are literally the engine that fuels this entire protocol. It's what supports the APR, it's what compounds value. Strong volume means the system is working exactly as it should.
And beyond that awesome volume, other indicators are also pointing to some real underlying strength, even on a day when the price itself was down.
First off, demand for bonds stayed really solid. A total of 41 new bonds were minted today on a red day. What does that tell you? It shows that people are seeing this little dip as an opportunity. They're confident enough to put new capital to work.
And that brings the total number of new bonds created over just the last 9 days to 514. That is a consistent, steady inflow of new capital, and it's a huge vote of confidence from the community day in and day out. At the same time, the Treasury wallet, the one the team uses for strategic moves, it just kept growing. The balance went up by over 5% in the last 24 hours alone. They are just accumulating firepower for whatever comes next.
Okay, so now let's do what we always do and zoom out. Let's look at the whole narrative of the past 9 days, because putting today into that broader story really makes things click.
You can really see the classic market pattern playing out here, can't you? First, we had that decline phase from day 1 to 5. Then, it was followed by that incredibly powerful V-shaped recovery phase from day 6 to 8 that completely wiped out all the losses. And now? Well, day 9 looks like the start of a new and probably healthy consolidation phase. So, with all of that data on the table, the price pullback, the massive volume surge, and those strong signs of conviction, what's our final health assessment for day 9?
Based on the balance of all these factors, we're moving the official health status from green to monitor. Now, this is not an alarm bell, it is just a signal to pay a little closer attention.
So why are we in a monitoring phase? Well, it's because you've got this balancing act going on. On one hand, you have these incredibly strong underlying metrics, that fantastic volume, the continued bond creation. But on the other hand, you have the negative daily price action.
It's kind of like the system's engine is roaring, but the car itself just slowed down for a moment. We need to see which one of these trends wins out.
So the key question for tomorrow is, does this consolidation hold? Is the ratio going to find a floor right around this level? Can that impressive trading volume stay strong? And, will the team see this as a good time to maybe deploy some of that growing Treasury wallet? These are the things we'll be watching closely. As always, thank you so much for joining this data analysis. We hope this breakdown gave you some real clarity on the state of the ecosystem. Just remember to always do your own homework before making any financial decisions. We'll see you tomorrow.